Hi, this is Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. But last week, the week ending January 11th, we had implied volatility and correlations hit a 5-year low. VIX 13.4 at the close on Friday. That is a 5-year low. Oil vol down a half a point on the week to 21.6. Gold vol virtually unchanged on the week with the spike that we saw on Friday. 1-month vol ending at 11.9%. FX G7 vol up marginally about 0.25% to 7.1% for 1-year at-the-money volatility. What stood out last week? First of all, Japanese yen vol, a 1-year high, now 1-month vol at 10.8%, basically holding up the rest of the vols from last week. Equity implied realized spread at a 1-year low right now, using the top 50 names in the S&P 500. Skew last week in the S&P 500 came off its low, but still trading in the 9th percentile. We had also widened spreads in term structure going from 4.9% to 5.3%. That's 3 weeks of consecutive widening in term structure when judging 1 through 3 month at-the-money implied volatility to 1-year at-the-money volatility in the S&P 500. Implied correlations right now, top 50 names at a 5-year low. Now, looking at last week, what kept the ceiling on volatility? What kept volatility from going higher? I would have to say, looking at all the asset classes at the S&P, at the CME, we had sovereign debt, oil, and euro vol specifically keeping a ceiling on implied volatility across the board. And conversely, what kept the floor on volatility, and that would be credit vol. Credit vol held pretty firm throughout the week. It's going to be a very interesting week. We have Monday the 14th, not a whole lot going right now, but we're going to start hitting the bigger part of the earnings season with a lot of banks reporting. The S&P's down a little bit, VIX up a little bit. We have volatilities across the board up marginally, but nothing really out of the ordinary. All eyes seem to be on the bar from the dividends and the earnings season coming out later this week. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.